Michael, stick with us while we bring in Robert Auerbach, professor of public affairs at the University of Texas at Austin. Mr. Auerbach is a former Federal Reserve economist who worked with the House Financial Services Committee during the tenure of 4 Federal Reserve chairmen: Arthur Burns, William Miller, Paul Volcker, and Alan Greenspan. He also serves as an economist in the U.S. Treasury's Office of Domestic Monetary Affairs during the first year of the Reagan administration, and he joins us now from Austin. Professor Auerbach, welcome to Bloomberg's Bottom Line. A pleasure to have you on.
It's a pleasure to be on. Thank you.
Sir, are we expecting any news out of this 2-day FOMC meeting? Any news that would, of course, involve maybe QE2 or any news of rate hikes?
I don't think he'll make much news because he's got himself in a very deep hole. Beginning in October of 2008, after the financial markets collapsed, he began paying interest on reserves. And the banks tied up a huge amount of reserves. Today, those reserves in the banking system amount to $1.5 trillion. And the only way he can keep those reserves from flooding the economy is to raise interest rates. And he said he might do that. That's the big question. If he starts to raise interest rates, just think what will happen. Last year, the Federal Reserve paid the banks $2.7 billion to hold on to $1 trillion worth of reserves. If he starts to raise them, say, to 1%, the amount paid to the banks will be over $10 billion. If interest rates go up to an average that they have in the past, say 5%, you're talking about paying the banks $60 billion a year to hold those reserves. It's a very bad, deep hole that he's in. The proper policy now is to reduce the interest and to start raising the target interest rate from zero.
Well, if he starts raising the target interest rate from zero, then banks might have an incentive to lend at higher rates, and that money might get out into the economy where it isn't now, causing inflation problems.
Well, as soon as in order to raise the target rate, he'd have to sell bonds to the public and dry those reserves up. And I hope that the banks do more lending. Lending, ever since they put that interest rate on, you just have to look at the charts. In October of 2008, all the way to the present, commercial bank lending has been very poor because the banks are. We put $600 billion into QE2. How much of that ended up doing nothing inside bank accounts? 57%.
Professor, then might I ask, any chance that we can see the Fed deciding that it is going to end QE2 early?
Well, there's a fight inside the Fed to keep it going. And I think it's a very, very bad policy.
Why do you say that, sir?
Because there's $1.5 trillion sitting in reserves in the banks. If interest rates start to rise, the banks will start making loans, buying income-earning assets. Then the Fed can dry up the money supply, any increase in the money supply, by raising its target rate and selling its securities to the public. Why should in a very bad state that the economy's been in, why should we give this enormous amount of money into the banking system? Just think of this: if the reserves stay at their present level, $1.5 trillion, and we start paying $60 billion a year to hold those reserves, the banks will get about a $1 trillion present value. And I'm sure the stockholders like it, the bankers like it, people like President Dudley and the New York Federal Reserve Bank certainly likes it, because 2/3 of the directors of the Federal Reserve banks are elected by the bankers. They love what's going on.
Professor, you used to work for Henry Gonzalez, the late Texas representative, when he ran the banking committee. He was a longtime critic of the Fed. I remember covering him during his hearings when Alan Greenspan was Fed chairman. Would he be happy to see that Ben Bernanke is going before TV cameras tomorrow holding a press conference?
He might be, but I think what he would like most is for the Fed to stop their very corrupt and deceptive policy for records. Let me just tell you why I say corrupt. For 17 years, The Fed said they had no transcripts of their Federal Open Market Committee meetings. Gonzalez didn't believe it, and he asked me to put the heat on them. In 1993, they were forced to show me 17 years of transcripts right around the corner from Greenspan's office that the Fed had said did not exist. That kind of corruption is still going on. Let me give you one other point. I worked at the Federal Reserve of Kansas City with a very excellent Fed official, Donald Cohn, who became vice chairman. He's an excellent person. He wrote to me when I found out that they were destroying the source transcripts that had been, they're held for 30 years at the Fed and then sent to the National Archives. In 1995, they decided to shred them and to only keep edited transcripts. I wrote to Alan Greenspan, and the vice chairman, he was a governor at the time,
right.
Don Cohn, wrote to me and said, well, he thinks it's legal to destroy the transcripts. That's still going on. No permanent record from these people, unelected officials that have immense power.
So what should be done?
I think what should be done is that the Congress has to impose some regulations on maintaining their records. And, for instance, the transcripts. Why do we have to wait 5 years to find out what they're doing now? The minutes that are put out are, you'll have to read my book sometime, or I'll put it in a blog. The minutes are mostly incorrect.
Yeah.
They do not have any, they do attribution of who's saying what. So we don't know what the people at the Fed are saying. They were started by Mr. Burns, Chairman Burns, as a way, after he told there wouldn't be any more transcripts, that was a falsehood.
Professor, if I might ask you in our last 30 seconds, Michael touched upon the press conference tomorrow, what might come out of it. And I was struck by a quote that I saw today from John Talton of the Seattle Times, and we'll put it up for our viewers. Mr. Talton writes today, on the one hand, transparency is good. On the other hand, much of the media and most Americans are financially illiterate. He goes on to say, central banking is complicated and not suited for a nation intellectually accustomed to American Idol. What are Americans going to get out of the press conference tomorrow?
Well, he will be very careful, I believe, not to talk about Fed policy, and anxious to talk about fiscal and budget policy, which he has no direct control over. So he'll dodge the questions on Fed policy.
Well, Robert Auerbach,
that's my prediction.
Professor of Public Affairs at the University of Texas, joining us from Austin. Professor, thank you so much. We appreciate your time today.